Hello students, after the last session that we had, where we discussed about IAS 16 and IAS 23, and we had done a lot of points over there. For instance, revaluation of an asset, which is covered under IAS 16, and then depreciation on the revalued asset. Also, we said that when an asset is sold, then what are the provisions? It's under IAS 16. So today we will be taking up a few questions, small, short questions on revaluation, because as I told you, it is one of the important parts of your financial reporting skills, right? So let us start with some basic questions. I suppose all of you can see the Excel screen, right? Let us go to the question first. Question is very small, answer also should be very small. Okay, that is not the logic here. The logic here is that we have to understand the question and accordingly write the answer, right? So what is given to us is that an asset was constructed at a cost of $5 million and it was estimated to have a dismantling cost of $1 million after 15 years. The site construction cost was $2 million. Calculate the depreciation and the value of the asset at the end of year one. Also state the liability at the end of year one. Expected rate of interest was 7% per annum. Why they have given the rate of interest? Because that will be the discounting rate. Okay, rate of interest is always the discounting rate. So let us start by writing cost of the asset. What is the cost of the asset here? The cost of the asset here is equal to purchase price. Okay, purchase price plus site construction cost, that is given to us in the question, plus what else is there? There is a dismantling cost. So for the dismantling cost, it is the present value of the dismantling cost. So present value of dismantling cost. Okay. So cost of the asset is equal to purchase price of the asset. It is coming to $5 million. So $5 million. Site construction cost $2 million plus present value of $100,000, which is $1 million, which is going to be incurred after 15 years, dismantling cost after 15 years. So it will be present value of $1 million. Okay, so cost of the asset is equal to 5 plus 2, $7 million plus present value of $1 million. How to write that? $1 million into present value. Okay, how do you write present value? How to calculate present value? It is 1 divided by rate of interest is 7%, so 1.07 raised to, how do you write raised to? Raised to how many years? 15 years. So cost of the asset is equal to $8 million. No, it is $7 million plus $1 million into 1 divided by 1.07. Let us do it on the calculation. 1 divided by 1.07 equal to function 15 times. So it comes to something like 0.362. So 0.362. cost of the asset equals to $7 million plus 0.362 multiplied by $1 million is $362,000 plus $7 million is equal to cost of the asset. $7,362,000. Okay, so this is your total cost of the asset. So it is going to include the purchase price or the purchase cost of the asset, the site construction cost, or any other installation expenses or incidental cost that is likely to be incurred, plus if there is a dismantling cost, we have said present value of that dismantling cost. So we have calculated that, but that is not the question. What is the question? They are asking to calculate the depreciation and the value of the asset at the end of the year. So let us calculate depreciation. Depreciation on the asset is equal to 7,362,000. $7,362,000 divided by 15 years. So that comes to 4,90,800. Okay, that is your depreciation. Okay. Value of the asset at the end of year one after depreciation. Cost of the asset. That will be 7,362,000 less depreciation. That is 490,800. So this is the value of the asset at the end of year one. Okay, so this is the value of the asset at the end of year one. Now, what is the third part of the question? First part was depreciation, second part was value of the asset. Third part is also state the liability at the end of year one. Now, liability for what purpose? What is a liability? Many students will leave the question. I did this in the class. Many students left the question after calculating the depreciation, after calculating the value of the asset. Because they said, sir, there is no liability. We have not purchased, they have not given that, we have purchased the asset on credit basis. Some students wrote the liability as the cost of the asset, 7,360,000. What is the liability that we are talking about? The liability that we are talking about is that we have shown present value of dismantling cost, which is payable at the end of 15 years. उसका आज का डेट का वैल्यू है 362,000, right? So that is a liability payable after 15 years. So that is my liability, isn't it? So I'll say liability at the end of year one. Okay, liability at the end of year one. What is a liability? It is the dismantling cost payable after 15 years, which we have calculated today, as 362,000. Correct? This is your 362,000. That's your present value of dismantling cost. Correct? So that is payable. But then we'll add the interest accrued. Interest accrued for 1 year at the rate of 7%. We discounted at the rate of 7%, isn't it? So since we discounted at the rate of 7%, now the rate of interest will also be 7%. So into 7%. So 3,62,000 into 7% for the first year, it is 25,340. 25,340. Okay. So this is your total liability at the end of year. Guys, always be observant, always be alert at the time of exam, because these are small things which you tend to forget, right? So they have asked you 3 things. One is the depreciation, one is the value of the asset at the end of the first year, and the third is the life. Okay, so I suppose that is clear to you. The students have got any questions, you can ask me. Nothing? Right. Let us come to question number 2. A company had a building which was revalued on December 31st, year 4 to $500,000. In year 5, it was decided to revalue the building to $475,000. There was a revaluation surplus in the OCI amounting to $50,000, out of which $25,000 was in respect to land and the balance was in relation to building. What will be the effect of the revaluation of the building in year 5? Company had a building which was already revalued and it was having a value. The revalued figure was $500,000. Now, we don't know from what value to what value it has increased. But if you see the question, they have also mentioned that there is a revaluation surplus in the OCI of $50,000. And out of that, 25,000 pertains to land. So the remaining 25,000 is assumed to be pertaining to building. Right? So, in that case, it means that when the revaluation was done in year 4 or before that, there was a revaluation gain of 25,000, which is still appearing in the OCI. अभी क्या हुआ है? It is decided to revalue the building to 475,000. From 500,000 to 475,000. So that means we are reducing the value by 25,000. Okay, so there is a revaluation loss of 25,000. Correct. There is a revaluation loss of 25,000. And this will be adjusted against the revaluation surplus. This will be adjusted against the revaluation surplus of 25,000, and the revaluation gain will remain at 25,000, which pertains to land. Okay. Or we can do one thing. We can make a small change over it. What we'll do is, we'll take this as 20,000. We'll take this as 20,000. Okay. So 25,000 का लॉस है, 50,000 में से 20,000 is in respect of land, so 30,000 is in relation to building. 30,000 balance है, अपना revaluation loss का लिए 25,000 है, so 5,000 is still going to be remaining in the OCI. So that 5,000 plus 25,000 or 20,000 of the land will continue to exist in the OCI. Okay, so let us write down this. Write down solution for this. There was already an existing balance. There was already an existing balance in revaluation surplus. In the revaluation surplus amounting to $50,000, out of which $20,000 was in relation to land. Therefore, revaluation surplus in relation to building is equal to 50,000 minus 20,000. 50,000 minus 20,000. That is equal to 30,000. In year 5, what we are doing? There is a loss on devaluation. There is a loss on devaluation amounting to how much? $25,000, which is $500,000 minus $475,000. So that is a revaluation loss. This will be adjusted. This will be adjusted and set off against the revaluation surplus. The revaluation surplus existing of $30,000 balance in the revaluation surplus. Balance in revaluation surplus will be only $20,000 relating to land and $5,000 relating to building. So total 30,000 का building का. Okay, 20,000 was in relation to land, 30,000 was in relation to building. Revaluation loss खाली 25,000 था, तो उसमें से 5,000 बचा. So 20,000 of land remains intact, and the 30,000 of building में से 25,000 loss adjust हो जाता है, और उसके बाद 5,000 बच जाता है, करेक्ट? So this is your explanation. Clear? Any questions? Anything that you want to ask? Any calculation that you have not understood? All clear. Students are saying all clear. Very good. That means you have studied. That means you have done your work properly. Ready for the exam. Not ready for the exam. I will make you ready for the exam. Let us look at this. A shipping company had a fleet of ships, each having a value of $40 million. The life was estimated to be 10 years. In year 6, the company revalued one of its ships, which was purchased 6 years back at $14 million. The ship was having a carrying value of $15 million at the time. Earlier, the same ship was revalued and resulted in a revaluation surplus of $600,000. What will be the accounting treatment of this revaluation in year 6? So, a fleet of ships means a number of ships, a group of ships, each having a value of $40 million. Life of the asset, 10 years. In year 6, the company revalued one of its ships, which was purchased 6 years back at $14 million. The ship was having a carrying value of $15 million of that. Carrying value was $15 million. But it was purchased at $14 million. Earlier, the same ship was revalued and resulted in the revaluation surplus of $600,000. Now you have to keep the dates in mind. See, in year 6, you are having the company revalued one of its ships, which was purchased 6 years back at $14 million. So 6 years back, it was purchased at $14 million. And now we are told that the ship was having a carrying value of $14 million at the time. So from $15 million to $14 million, $1 million a loss. Okay. Out of that, earlier, you are told, earlier, the same ship was revalued. मतलब 6 साल के बाद $15 million से $14 million की रिवैल्यू, तो $1 million का लॉस. But earlier than that, there was surplus. There was a revaluation surplus of $600,000. What will be the accounting treatment of this revaluation in year 6? तो पहले सरप्लस हुआ है, गेन हुआ है $600,000 का, उसके बाद लॉस हुआ है. If you remember session 3, I have done this with you. पहले लॉस हुआ है और बाद में गेन हुआ है, तो लॉस को पहले सीधा ट्रांसफर करने का एसओपी है. गेन विल गो टू, सब्सिक्वेंट गेन विल गो टू उसी. लेकिन पहले गेन हुआ है $600,000 का, तो वो ओसीए में गया होगा। अभी 1 मिलियन का लॉस हुआ है, तो लॉस विल बी एडजस्टेड अगेंस्ट $600,000 टू द एक्सटेंट पॉसिबल। 1 मिलियन पूरा तो एडजस्ट नहीं हो सकता है, तो 1 मिलियन में से कितना एडजस्ट होगा? 1 मिलियन में से ओनली यस 600,000 एडजस्ट होगा। तो बाकी कितना बचा? 400,000 का लॉस स्टिल रिमेन्स, दैट विल बी ट्रांसफर्ड टू एसओपीएल, राइट? सो राइट डाउन solution. In year 6, a ship having a carrying value, of $15 million is revalued to $14 million. Is revalued to $14 million. That million over here. Okay, and therefore there is a revaluation loss. Okay, this revaluation loss we can also call it as impairment loss. We learned it last time. We learned impairment loss to the extent of $1 million. Now there is already a balance in revaluation surplus to the extent of $600,000. To the extent of $600,000. Okay. Therefore, out of $1 million, loss, an amount of $600,000 can be adjusted against the revaluation surplus in OCI. The remaining loss of $400,000 will be transferred where? Right, SOPL in year 6. Okay. So suppose the points which were discussed in your session 3A, where we discussed entire IA 16, उसमें प्रॉपर्टी प्लांट एंड इक्विपमेंट के बारे में बात किया था, डेप्रिसिएशन के बारे में बात किया था, रिवैल्यूएशन के बारे में बात किया था, रिवैल्यूएशन होने के बाद डेप्रिसिएशन आएगा तो क्या करना है, देन एक्सेस डेप्रिसिएशन की भी बात हो गई थी, that if there is excess depreciation, we can adjust it out of the the revalued surplus, revaluation surplus to retained earnings may transfer to the. But as I told you, only if there is a policy to that extent of the company. If the company does not have such a policy, then it cannot be. Right? So that is very important for us to understand. Okay, you want me to explain this loss to you, correct? See, there is a loss. First, there is a revaluation gain. There is a revaluation gain. First, to the extent of $600,000. Then you have a revaluation loss or an impairment loss to the extent of $1 million. लेकिन अपने पास ये $600,000 पहले से है, वो गेन है, पहले उसमें से निकालना है, पहले उसमें से एडजस्ट करना है. So out of this $1 million, I will adjust revaluation gain against उसके सामने I can adjust $600,000. Okay? तो बाकी का जो $400,000 है, ये बैलेंसिंग, बाकी का जो $400,000 है, तो ये कहां पर जाएगा? अभी तो रिवैल्यूएशन गेन खत्म हो गया, राइट? तो ये कहां जाएगा? एसओपी. नाउ क्लियर? ठीक है. Let us take test your understanding 2, which is from Kaplan. On 1st April 20x8, the fair value of Zoos property was $100,000 with a remaining life of 20 years. Zoos policy is to revalue its property at the end of each year. On 31st March 20x9, the property was valued at $86,000. The balance on the revaluation on 1st April 20x8 was $20,000, which relates entirely to the property. X does not make a transfer to realized profit. Does not make a transfer to realized profit in respect of excess depreciation. Does not. Okay. You are asked to prepare extracts of the financial statements for the year ended 31st March 2023, reflecting the above information. State how the accounting would be different from if the revaluation surplus did not exist. Okay, I am concerned only with the first part now. I will leave the second part to you. So let us try to understand कि अगर ये first part solve करना है, तो कैसे solve करना पड़ेगा? What all calculations we need to do? Okay, so let us try to understand that first. So as I told you, this is important for us. Okay. So what do we start with first? We first start with working note on depreciation. So working note 1 on depreciation. Depreciation on property is equal to value of the property is $100,000 divided by life of the asset, that is 20 years. Okay. So that comes to $5,000. $5,000. Working note number 2. Revaluation of asset. Carrying amount of the asset is 100,000 minus 5,000. That is 95,000. Asset is revalued to. Asset is revalued to 85,000. Oh, sorry, 86,000. Yeah. 86,000. So there is a revaluation loss of 9,000. This is loss on revaluation. Revaluation loss. Do we have a balance in the revaluation surplus? Yes. On 1st April 2028, we are having a balance of 20,000. Against that, we can adjust this loss of 9,000. Okay. And wipe out the entire loss. Fine. So from OCI, that 9,000 can be adjusted. So since there is a balance in the revaluation surplus, account of $5,000, the revaluation loss is adjusted first against the revaluation surplus. Now let us prepare extract of statement of profit or loss for the year ended and the OCI for the year ended 31st March 20x9. So what all things will come over here? You can shift this to this. What all things will come in the statement of profit and loss? Depreciation will not, as per the working note 1, 5,000. Working note 1, 5,000. So since it's a loss, I'll show it as minus 5,000. Then I have other comprehensive income. Other comprehensive income. Revaluation लॉस जो है यहाँ से एडजस्ट हो जाएगा to the extent of 9,000 तो minus 9,000. Okay. नेक्स्ट में प्रिपेयर करूंगा extract of statement of changes in equity. Extract of statement of changes in equity. Revaluation gain or revaluation surplus you can get. ओपनिंग बैलेंस अपने पास कितना था 20,000 था लेस evaluation loss adjusted of current year 9,000 so 11,000 balance. Okay, so extract of statement of profit or loss हो गया and then we have prepared extract of statement of changes in equity. Now let us prepare extract of statement of financial position. Not completed. I suppose everyone is doing their revision for the September exams on a daily basis without fail. Those who are working students, see that you take a break from your office, side end, done. Let us now come to extract of statement of financial position. Starting with non-current asset. It's like starting with fixed assets. Fixed assets is a non-current asset. What do we start with? Property, land, and equipment. Okay, guys, those who are new for this session, I've always told you for financial reporting, FR paper, never write short forms, balance sheet, profit and loss account. Even if it is an extract, don't write PPE. No, sometimes when we are writing, we are overconfident. Sir, examiner ko pata chalega, he will understand. It's not a question of examiner understanding. It is a question of your paper. Your paper is financial reporting. Financial reporting में report कैसे लिखते हो, balance sheet में कैसे entry दिखाते हो, that is important, right? So property, plant and equipment, 86,000. 86,000. No other items are there. I will take equity. उसमें दिखाऊंगा रिवैल्यूएशन सरप्लस, जो भी बैलेंस है, अभी बैलेंस कितना बचा है, बैलेंस कितना बचा है 11,000, right? So revaluation surplus, it is going to be 11,000. That's it. Let us see the second part of the question. Second part of the question क्या पूछ रहे हैं? State how the accounting would be different if the opening revaluation surplus did not exist. It's not a big deal, na? If the opening revaluation surplus did not exist, then that impairment loss जो भी है 9,000 का जो loss है, that would be straight away transferred to SOPL, right? So write down, not an issue. If the opening balance in revaluation surplus was not there, or instead of writing was not there, you can write did not exist. Then the revaluation loss, of $9,000 would have been transferred. To SOPL. That's it. So basically, guys, you have to understand that we are concerned with application of concepts. You have to know how to apply the concepts. Please, for heaven's sake, don't mug up and go for the exam. Don't feel that solving problems, numerical questions from any material, whether it is Kaplan or BPP or any other material, Marticus learning, or questions that I have given to you. कि इसमें से ही आएगा, because it's a global level examination. कहीं से भी आ सकता है. There are so many materials which are there all over the world. तो कहाँ से वो उठाते हैं, क्या problems create करते हैं, उनके दिमाग में क्या आता है. So accordingly they will frame the question. So you can't estimate or you can't assume that this type of question will come or that type of question will not come. ऐसा assume नहीं कर सकते. So don't take a chance. Understand the concept, study the concept, study application of concept. Okay. So in this session, we have taken about 5 questions. Next session, again, we'll take up something else, maybe we'll take up IAS 40 and we will see how to convert asset from IAS 16 to IAS 40 or vice versa. Something like that we'll do. Or maybe something someone suggested कि लीज का प्रॉब्लम्स करना है, तो ठीक है, हम लोग लीज का प्रॉब्लम करेंगे. So yeah, some new students are there. So you have not done lease accounting in your regular session. So fine, we will be doing lease accounting in the next session, right? So let us stop here and keep revising on a regular basis and see that you are up to date, right? Thank you.